Hey everybody, this is Ray Halstead and Andrew McMillan with REH CPA. Today we want to talk about some of the tax changes that would occur if you were to get married. Some of you out there are getting ready to tie the knot, and you may have some questions on, hey, what do I need to do once I get married tax-wise? What am I looking at as far as changes? I've got Andrew McMillan here with me today. Andrew, what can you tell us about, once you get married, what to expect from a tax perspective?
Yeah, so there's a few things to just to be mindful of. Once you do get married, it's always important to, well, one, if one of you is changing your last name, you're going to update your name with the Social Security office. And you want to make sure you do that pretty quickly because the Social Security office is going to notify the IRS of that name change as well. So you want to make sure the IRS has a record of that so that your tax return can be filed electronically. If there's some differences there, you could potentially have some issues getting that tax return filed. But that would probably be step one. And then after that, I would definitely want to make sure if you are a type of person who receives a W-2 wage, like most of us, contact your payroll HR department to see what your withholdings are, because you may want to complete a new W-4 form. The W-4 form is basically your way of notifying your employer what your filing status is, like if you're married, if you have children. It helps make sure that your employer is doing the correct amount of withholdings because once you do get married, there used to be this thing called the marriage penalty. You don't see it as much anymore, but what the marriage penalty is you basically pay more tax by being married. So when you file tax returns individually as singles, you have tax rates and a standard deduction. So now those tax rates and standard deduction have been doubled. Like if you're single, they're one way. And then if you get married, those rates basically double. They used to not always double. They used to not be completely double of one another, if that makes sense. So there used to be what you would call a marriage penalty where you would get married and you would actually pay a little bit more tax because those tax brackets didn't double for joint filers. We're in some new tax law now for the last few years, and that marriage penalty has been significantly reduced, but getting married you would want to at least address that and take a look at that, especially for some higher income earners.
Yeah, absolutely. Especially with your W-4, you definitely want to do some tax planning there because we see it a lot of times where, you'll have one spouse who's a high earner and his income is being withheld at like 25%. And then you got another spouse who is not as high a earner but their income's only being withheld at like 10%, or sometimes not at all, because they don't meet the threshold based on by themselves. But when you put the two together, it creates a large tax balance, and that's where people can run into problems.
Yeah, we see that a lot during tax time. Some unexpected balances due for married couples now. So it's just something to be mindful of when you get married. Look at your W-4s, see how much is being withheld, see where you think that tax rate's going to be for you at the end of the year to make sure you're staying on track with that. And then kind of lastly, as far as filing statuses go, once you do get married, you really only have two options: married filing joint or a married filing separate filing status. And it's going to be determined on the last day of the year. So if you were married on December 31st of the year, then you're married for that year. You can choose between those two filing statuses. So it's almost always best to do a married filing joint return. It can get kind of complex for some individuals if they got some unique situations, but 9 times out of 10, you're going to want to do a married filing joint return. That's usually always best. It allows you to take more credits, more deductions that are available to you. Married filing separate definitely is a bit more strict on what you can do there. So most CPAs, we oftentimes prepare returns, and then we can split it and say, well, if you do joint or if you do separate, this is what your tax balances are going to look like, just to help you make a better decision on what you want to do. But it's almost always going to be better to do a married filing joint return.
Yeah. Awesome. Well, really good information, Andrew. If you are planning to get married or you just got married and you've got questions on how that would affect your taxes, feel free to give us a call and we'll help you out. Thanks.